Hello mga Kamaniwise! Welcome back to my channel. Today, I'm excited to share an update sa aking signature dividend portfolio. If you've been following my journey, alam nyo na I carefully select high-quality dividend-paying stocks. And this time, meron akong bagong dinagdag sa aking portfolio. My signature portfolio consists of stocks and REITs that provide dividend income and meron ding potential for capital appreciation. I focus on companies with strong fundamentals, consistent dividends, and solid growth potential. Kung may Dragonfly account ka, makikita mo ang Moneywise Engineers portfolio sa signature portfolios ng Dragonfly. At pwede mo rin itong i-copy trade kung meron kang Dragonfly account. I use the PEACE framework which I learned from Value Investing College sa pagpili ng stocks na bibilhin. I look at these 5 key metrics: profitability, inflow of cash, efficiency, conservative debt, and economic moat. In addition to the 5 key metrics, I also look at the company's return on invested capital. The higher the ROIC, the better. Kasi a high ROIC stocks tend to sustain higher long-term growth. Disclaimer, this is for informational purposes only and not a financial advice. Investing comes with risk, so always do your own due diligence before investing. Ang dinagdag ko sa signature portfolio ko ay isang company with solid fundamentals, ang International Container Terminal Services. Ticker code ay ICT. Hindi pa ganun kalaki ang dividends ng ICT, pero growing ito kaya promising for the long term. As of now, ICT operates 32 terminals across 19 countries on 6 continents. ICT has demonstrated strong revenue and earnings growth over the past 8 years, reflecting solid market expansion and improving profitability. Ang revenue ay nag-grow at an average annual rate of 11.7%. And yung earnings naman have grown at a faster rate of 26% over the past 8 years. ICT's profit margin has been growing, indicating improved efficiency and profitability over the years. Sa revenue breakdown, 41.6% comes from Asia, followed by the Americas at 39.2% and 19% naman from Europe, the Middle East, and Africa. ICT revenues increased by 14.7% in 2024 versus 2023. America showed the highest growth at 26%, and then followed by Asia at 9.4%, while EMEA grew by 6.3%. Revenue growth was mainly driven by volume growth with favorable container mix, tariff adjustments, higher revenues from ancillary services, and increased general cargo activities at certain terminals. In terms of profitability, nag-grow ang earnings per share at an annualized rate of 24.7% over the past 8 years. Ang EPS ay medyo mababa from 2016 to 2019, and then biglang tumaas noong 2021, and then it continued to grow and it reached a record high of 23.39 pesos per share in 2024. Sa inflow of cash, ICT's operating cash flow ay consistently positive and it continues to grow. This shows that ICT is consistently generating and increasing its cash from its core business operations. Sa efficiency naman, ICT has consistently delivered strong earnings, contributing to its consistent high return on equity. This reflects the company's efficient operations and ability to generate strong returns from its shareholders' equity. Mataas ang debt-to-equity ratio ng ICT due to its capital-intensive nature. ICT requires significant capital expenditures for developing, maintaining, and upgrading its port facilities, equipment, and infrastructure. Pero ICT's net debt to equity ratio has been steadily declining over the years, indicating that ICT is reducing its leverage. Despite its high debt to equity ratio, mataas ang interest coverage ratio at 5.1 times, which means that ICT generates sufficient earnings to cover its interest expenses and maintain financial stability. And meron ding cash na $1.26 billion. Tumaas significantly ang ROIC ng ICT starting noong 2021 at nasustain ang mataas na level. This shows a remarkable improvement in ICT's ability to generate profits from its invested capital. What enables ICT to maintain this level of profitability is its strong economic moat. An economic moat refers to a company's sustainable competitive advantage that protects it from competitors. Si Warren Buffett ang nagpopularize ng concept na ito, which was later refined and categorized by Morningstar into 5 key types of moats. These are the 5 key types of moat: cost advantage, switching cost, network effect, intangible assets, and efficient scale. Hindi naman kailangan ng isang company na magkaroon lahat ng 5 types of moat to have a sustainable competitive advantage. Companies with multiple moats tend to have stronger long-term competitive advantage. But even a single powerful moat can be enough to sustain profitability. Companies na merong cost advantage moat can sell products or offer services at competitive prices. And meron ding flexibility to lower prices to be able to compete more effectively. Example dito ay Pure Gold. Pure Gold operates a low-cost retail model by focusing on bulk buying and efficient inventory management. Compared to SM and Robinsons supermarkets, Pure Gold stores are simpler and more cost efficient, allowing them to offer lower prices to customers. Kaya mas mura maggrocery sa Pure Gold. Merong switching cost moat ang isang company when customers find it expensive and inconvenient to switch to other brands or competitors. Example dito ay mga telecom companies like PLDT and Globe. Subscribers are locked into contracts for their broadband or mobile services and merong penalties for early termination. And meron ding bundle services na nakakombine ng internet, cable TV, and mobile services which makes switching more complicated. And pag nag-switch sa ibang provider, kailangan uli magbayad ng installation cost and sobrang hassle. Sa network effect, a business becomes more valuable as more people use its product or service. Example dito ay GCash and Maya. The more users and merchants that accept Maya and GCash as payment methods, the more useful these platforms become. When more people use the service, its value increases. Ito naman ay mga companies with strong brand recognition, trade secrets, patents, or licenses and government approvals that is difficult for competitors to replicate. Example is Jollibee. Jollibee is an iconic brand and meron siyang strong customer loyalty. Another example is San Miguel Corporation. Meron siyang strong brand recognition gaya ng San Miguel Beer and Ginebra San Miguel. Efficient scale mode occurs when a company operates in a niche market with limited demand. Example dito ay Manila Water Company and Maynilad. These companies dominate water distribution in Metro Manila. They are under long-term government concessions, making it hard for new players to enter. Now that we understand the different types of economic modes, i-analyze naman natin ang ICT and identify which modes give it a strong competitive edge. Unang-una, ICT has efficient scale mode. ICT operates in a highly specialized industry with limited competition. And then operating container terminals requires massive infrastructure, specialized equipment, gaya ng cranes, yard equipment, and deep water access. All of this cost a lot of money. Next is intangible assets. While ICT is not a consumer brand, ICT is well known within the shipping and logistics industry. And ICT's government contracts and licenses also create high entry barriers, making it hard for new competitors to enter. Meron ding switching cost mode ang ICT. Large shipping companies and logistic firms integrated with ICT ports will find it costly to shift to competitors. And meron ding network effect mode ang ICT. So ICT manages terminals in high growth regions. And the more ports they control, the more valuable their network becomes to customers. So based on this, masasabi ko that ICT has multiple strong modes, making it a well-protected business. So I'm giving it a score of 5. ICT's trailing 12 months dividend yield ay 3.72%. Mababa pa sa ngayon, but the company has a strong long-term potential. And if we look at the dividend history, so papataas yung dividend ng ICT. Nag-grow ang kanyang dividend at an annualized rate of 19% from 2019 to 2025. Ang kanyang dividend payments are well covered by its earnings and free cash flow. Mababa ang kanyang payout ratio from its earnings and free cash flow. Moving forward, ICT plans to adjust tariffs throughout the year with increases already implemented in Honduras, Madagascar, Australia, Manila, and Cagayan de Oro. And upcoming hikes are expected in Subic, Nigeria, and Mexico. ICT is also expanding and upgrading existing ports to boost capacity and efficiency. Nag-allocate ng $580 million in CapEx for 2025. ICT has also addressed the concerns about the potential impact of Trump's tariffs. So sabi ng ICT, only 2.5% of its total volume is directly shipped to the US. The company's key volume drivers, local consumption, raw materials, and export demand remain largely unaffected. Ang aking buy below price is 384 pesos. With ICT's solid fundamentals and growth potential, I decided to add it to my portfolio maski na hindi ganun kalaki ang kanyang dividends kasi malaki ang kanyang growth potential even sa dividends. Kaya lang tumaas na agad ang price kaya hindi na ulit ako nakapagdagdag. And parang sa GSMI lang na hindi ko na rin nadagdagan. Thank you for watching and see you next time.